Hello, everyone. Welcome to Legal Munch. I'm Dr. Kalpana Jayas. In this lecture, uh, we would be dealing with a role and function of capital markets. So, before going to the main theme, we should know what is capital market. Introduction to capital market is important, and this is the first lecture of investment laws in the series. So, capital markets are the lifeblood of a nation's financial system, mobilizing long term funds of businesses and governments while facilitating economic growth and investment. Now, coming to the meaning of capital markets. What is the meaning of capital markets? So, legal definition is there under Security Contract Act. Regulation Act 1956, capital markets refer to any market for securities where companies raise long-term funds encompassing both primary and secondary market operations. If you know something about share market, where equity share, IPO, these are all financial products, and that market is called capital market, for an example. So, in order to understand it simply, a capital market transform idle savings into productive investments, channeling funds from savers to businesses that need capital for growth, expansion, and innovation. If you're buying one equity share from Tata Motors, then whatever the growth it would be taking in the market, your money would also grow. And people usually invest who are having little literacy about demat accounts and dealing with the equity markets. Now coming to the structure of capital market, how they are structured. There are two kinds of capital market. First is primary market, second is secondary market. So where new securities are issued for the first time through initial public offer. In short, it is called IPOs, FPOs, fund public offers, right issues, and private placements. Historic example recently, LIC in 2022 raised IPO over 21,000 crore of capital from the market through primary market because it was an IPO, India's largest till now. Secondary market, it is a platform for trading already issued security. You are buying from a secondary market when I can sell my shares and someone can buy my shares. It is not directly from the company. So providing liquidity and continuous price discovery. The key function of secondary market is daily trading on National Stock Exchange and Bombay Stock Exchange, reflects market confidence and company performance. Now coming to the core functions of capital markets. First is mobilization of savings. People usually invest their saved money to capital market in form of mutual funds, equity market, derivative, or soft gold bonds. So transform idle household saving into productive capital through mutual funds, SIP, which is very common, you must be seeing in advertisement, systematic investment plan, and bonds. Capital formation is second one, encourages creation of new industries, expansion of existing ones, strengthening the national economy. Thirdly, liquidity and marketability. Investors can easily convert securities to cash through stock exchanges and ensuring confidence. I was watching recently a video about people are having their virtual value of their flats, shops, but when it comes to selling in the market, they are not getting buyers. But it is not the case with capital market. Whatever the value is being shown, that is real and actual, unlike of real estate. Price discovery and corporate governance. Now coming to how does it function? So price discovery mechanism, continuous buying and selling determines fair market prices based on demand and supply dynamics. So there's one case, Hindustan Lever Employees Union versus Hindustan Lever Limited, 1995. Supreme Court highlighted the importance of fair valuation and transparent market mechanism. Since it has been online and internet, you can see everything which is transparent, unlike what happened during Harshad Mehta scam, where people were not knowing about it, what is happening in capital market. But when the things are online and you can see every development on internet, so it is very transparent right now. So promotes corporate governance. Listed companies must follow SEBI's disclosure norms, governance standard under SEBI. Regulation 2015. SEBI versus Sahara India Real Estate Corporation, that is a landmark judgment which came in 2013, reinforced SEBI's authorities to regulate capital markets and protect investors, where Sahara India company made a scam of 65,000 crore. Foreign investment and economic growth. If foreign portfolio investors held nearly 54 lakh crore worth of Indian equity as per SEBI's 2024 report. Liberalization era, which came in 1990s, opening of Indian markets to global investors through FII regulation and SEBI FPI regulation 2019. 100% economic engine, capital markets, fund infrastructure, manufacturing and innovation acting as engine of development. There is a one case reference, Tata Iron and Steel Company Limited versus Union of India. The case came in 2000. Recognized the significance of financial markets in national industrial development. Now coming to which are the key institutions in Indian capital market? SEBI, Security Exchange Board of India, which is regulator ensuring investor protection, market efficiency, and corporate transparency across all capital market operations. So all capital market is subjected to SEBI regulation. Stock exchanges, we have two stock exchanges, National Stock Exchange and Bombay Stock Exchange, provide platforms for securities trading, ensuring liquidity and fair valuation mechanism. Depositories, NSDL and CDSL maintain dematerialized records of securities, ensuring secure and efficient settlement. You must have received emails when if you are trading in equity market from NSDL and CDSL. Intermediaries, merchant bankers, brokers, underwriters facilitate issuance and trading of securities through demat accounts. Rating agencies, CRI, SIL, ICRA evaluate credit worthiness of companies and financial instruments for informed decisions. Now coming to the legal framework and landmark cases, how capital market functions and what is the legal framework. So we do have certain legislations. Security Contract Act, which came in 1956, governs stock exchanges and security transactions, establishing the foundation for organized trading. Another act is SEBI, establishes SEBI's powers to regulate insider trading, mutual funds, initial public offers, protect investors' interest. Depositories Act enables dematerialization of securities, modernizing the Indian capital market infrastructure. Companies Act, which has recently, not recently in 2013, we had Companies Act 1956, which has been replaced by Companies Act 2013, regulates issuance, disclosures, governance, obligation of public companies in capital market. SEBI LODR regulations lays down comprehensive disclosures and corporate governance requirement for listed companies. Now coming to the modern trends and challenges. So current challenges are, in brief, insider trading and market manipulation tactics. Definitely wherever humans are there, they locate the hacks. Unethical corporate disclosures, transparency issues, volatility from global financial crisis, cyber threats, and algorithm trading risk. Limited financial literacy among retail investors. Sometimes they lose money in the market because they do not know uh, in which company they should invest or which mutual fund, because you must have been hearing one disclosure: mutual funds are subject to market risk. Which market? It is a capital market. Emerging reforms, digitalization, mobile trading apps, and real-time analytics helps people to know every time, anytime they can see what is the growth, if they are losing, if they are gaining, and what is the time to exit from equity market, and they can sell anytime their financial product. Regulatory sandboxes for fintech and algorithm innovations. ESG investing, green bonds aligning market with sustainability, blockchain integration ensuring transparency and traceability. There's one case, the Adani Hindenburg issue, which recently came in 2023, reignited debates on disclosure norms and valuation practices and FPI transparency requirement. Because of that, Adani share sharply fell down in the market, and still they are in the mode of recovery. So, concluding today's lecture, what is the capital markets are the strength of an economy. The strength of the nation's economy lies not only in the production, but its stability to convert saving into investment. And that is the true role of capital markets. So make your money work hard for you. That is a saying popularly said by people who are know how about capital markets. So today's takeaways are: capital markets are more than trading platforms. They build trust, mobilize capital, ensure transparency, enable inclusive prosperity. When capital markets function efficiently, they reflect confidence, growth, and stability across the entire economic system. With this, I would end here. Happy learning.